Okay, the sell-off continues. We have now panic selling taking place, breaking through the 5,400 level of support, going down, testing the August low, slightly breaching that. The Dow down 2,231 points, down 5.5%. The S&P was down almost 6%, down 322 points. The Nasdaq was down, same thing, almost 6%, 5.82%. The Russell was down 4.37%, and the VIX reached 45, rising by over 15 points. It was up just under 51%. At the highs of the session, it was up over 51%. The VIX is called the fear index, and right now we're seeing fear, extreme fear, and extremely negative sentiment. The VIX was up over 51% at the highs. It closed near the highs. The S&P closed near the lows. It was down just over 6% at the lows on the S&P. It closed just under 6%. The VIX closed just under the highs, 51%, almost 52% higher, but closing near those highs. The VIX closed at 45.31. It was as high as 45.61. Here's what has happened to the S&P 500 every time we've reached 45 on the VIX. The VIX reaches 45 in the first case in a month. Okay, this is what has happened. And again, here's all the dates: 97, 98, 2001, 2008, all of it. 2020. What happened 1 day later, 2 days later, 3 days later, all the way to a week and 2 weeks later. The very next day, big rally most of the time. Again, S&P dropped almost 6%. These rallies followed a VIX 45. The very next day were pretty big. 2 days later, a little bit less. And here's the averages right here. 83% were positive, but it was less. 2 days later, still mostly positive, except for two of the cases there. It was three of the cases were negative, but the average gain, small and large average, was bigger than what we had the second day. The third day was better, and again, 3 days later, powerful moves, huge percentage moves back up. Average percentage gain on all of those events. Days later was just a little bit better. 4 days later, it was even better, averaged 3.35%. A lot of big recoveries 4 days later. Percentage-wise, 1 week later, after the VIX reached 45, 1 week later, the average was 4.28%, including the downturn in September of 2008 with the Lehman moment and the financial crisis and all of that. But again, pretty big gains percentage-wise. In some cases, a 13%, almost an 8%, a 7% almost, nearly 9%, nearly 8%. So some big ones, a couple of small ones in there, just over 0.5%, 2% here, a couple of negative ones as well. So again, but most of it, a week later, was pretty powerful. And that averaged out, even with the negative number there in September of 2008, 4.28%. 2 weeks later, there were still some solid gains, creating some bottoms in some of those cases. Others continued to sell off, again, like what we had in 2008. And this now seeing extreme fear. And you can see right here, we have a reading of 4. It was at 8, then it went to 6, and now it's at 4. We closed at 4. This is a lower reading than what we had. We had the extreme fear during the financial crisis. This is the worst level that we've seen since the 2020 sell-off with the pandemic. A lot of it is that investors are having a hard time seeing that there's a way out of this. That's why we're seeing panic selling. That's why we're seeing this overreaction. And then the media is trying to work everybody up into a tizzy, as they always do. They're cheerleading for the stock market to collapse right now. All you got to do is just go look at all the different news sites and the articles that they're writing. Now, we've had extreme fear. Now, when we topped, we never went to greed. We never went to extreme greed. We topped at neutral, and we were hovering with the the January rally and the February rally up. We were hovering in fear to neutral, and the best we got was a reading of 50 at neutral. We have extreme fear. Again, this is what bottoms are made of. The last time we had extreme fear, we had the low and the rally back up, the March low, March 13th low, and we rallied back up to the 200 period moving average. Could the extreme fear we're seeing right now produce a bottom? With extremely bearish sentiment, again, we've reached a one-year high, 61.9% of bears, 21.8% of bulls, neutral 16.3%. This is the highest level that we've had since the 2009 bottom after the bear market. This is the highest reading we've had. This is a one-year high. Now, here's the AAII sentiment survey on a chart, and you can see here that, again, we got it this week, 61.9%. The last time we saw these readings was during the bottom of 2009, after the bear market there, at the bear market lows. After that, it was in 1990 is when we saw these extremes. In the 60s, a recovery followed a week later, 2 weeks later, a month later. In both cases, it marked bottoms. 6 months later, we had significant recoveries for both 25.66% in 1990 and in 2009, 40% higher. A year later, 28% higher in 1990 and 57% higher in 2009, 1 year later. Again, I believe we're in an overall topping process, but I do believe there's going to be recovery made. As we see it, it's going to likely be very, very powerful. We're being told right now there's no possible way that can happen. The herd, the top, at the December and the January top and the February top, those tops that were made, they were telling us there's no possible way we can go down. And now they're telling us there's no possible way we go up. Sentiment gets so bearish, and that's where bottoms are born. You get multiple weeks like this where you just get such negative sentiment, extreme fear, and high volatility. We had China retaliate, and that's what the selling was all about. But we had the jobs report come in. It came in better than expected. It was supposed to come in at 140,000. It came in at 228,000, and that's better than the 151,000 previously the prior month. The unemployment rate did tick up to 4.2%. Futures tried to initially rally with that after the sell-off. The markets opened, the rally ended up failing, and by the end of the day, rally attempts failed. We had a rally attempt with futures with the jobs report. We had a rally attempt with Powell. That failed. Powell provided no hope for the markets. The markets were hoping he would talk about cutting rates. And again, Powell expressed concerns about inflation because of the tariffs. That's why the markets were rattled when China retaliated. China to impose a 34% retaliatory tariff on all goods imported from the U.S. Starting April 10th. So next Thursday. And then later, Trump came out on social media and said China's played it wrong, that they panicked. So the concern now is, okay, what's going to happen now? Okay, China has retaliated. Trump slapped on tariffs. China had already had tariffs. Trump put on reciprocal tariffs. China retaliated. Now, what does the United States do? And that's what concern is. What's now going to happen? Trump going to walk it back? Tariffs going to be dropped and negotiations happen? What's going to happen? Uncertainty. And the market doesn't like uncertainty. That's why we're seeing panic selling right now. But it's an overreaction. And like I said, eventually we're going to see negotiations happen. Eventually, we'll see some of the tariffs go away. Certainty right now with Trump's tariffs is, okay, how long are they going to be here for? Is it going to be short-lived? Is it going to be permanent? And that's really creating a lot of uncertainty. But again, nevertheless, there is an overreaction taking place. After the retaliatory tariffs, Trump went on social media and wrote this: China played it wrong. They panicked. The one thing they cannot afford to do. So again, Trump is purposely being unpredictable with these countries and with the tariffs because they don't know what he's going to do next. And he's really being very, very unpredictable. And that's, again, one of the things that Wall Street doesn't like right now is you don't know what Trump's going to do next. We saw the steel and aluminum tariffs put on Canada, 25%. They retaliated with a surcharge on electricity, and Trump doubled the tariffs. They caved immediately. We'll see what happens here. Does Trump do something like that? Does Trump begin to walk it back like he did with the other tariffs with China, or I'm sorry, with Mexico and Canada? We had the tariffs. The market started having a very negative reaction to it. The tariffs on, March 4th on Canada and Mexico, and then Trump walked it back. A day or two later, he walked it back and said, well, everything previous trade agreement is shielded from these new tariffs. So again, walked that back. So again, Trump walked something back. Do we see Trump double down and China cave? Do we see further escalation? And that's what Wall Street's concerned about right now. We had Trump further respond saying that his policies will never change, causing concerns about a trade war escalating. We have Powell we have Powell's speech and Q&A, and Powell expressed concerns about inflation. Before Powell made a speech, Trump called on Powell to cut rates. Let me just say this, the 10-year yield is dropping. Yields are falling, collapsing. The bond market is doing more easing right now than what the Fed could do. We've seen yields, and I'll take the time to show you the chart, completely collapse. Powell dismissed stagflation. Again, remember the Fed raised their inflation target, but then they lowered their economic growth. Powell continues to maintain that it's not recessionary, but asked directly today about a recession, beat around the bush. Again, the Fed is worried about inflation when they should be worried about a recession. Powell continued his no rush to cut. Disappointed the markets. The markets were looking for the Fed to come in and save the markets, and Powell offered no hope whatsoever. He expressed concerns about inflation, and I got an exact quote here. Listening to him, he said, "We don't need to be worried. We don't need to be in a hurry." The market didn't like that. And again, the market wants the cuts. They believe that the cuts are very, very bullish. What we saw happen in 2020 and 2021. When, again, the rate cuts are going to be bearish, going to be associated with the coming recession and the economic downturn. Powell rattled markets even further by expressing concern that the tariffs will raise inflation and slow economic growth more than expected. Trump had a positive conversation with Vietnam. Now wants to cut their tariffs down to zero and get the tariffs removed from the United States. Trump extended the TikTok ban deadline now that tensions are heating up with China. So that's a big question mark, with now tensions beginning to escalate. Now, signals continue to be on a sell. Last week we got that doji. It warned something big was getting ready to happen. Sold off to the Monday low. We had a rebound back up of 3.72%, and then the sharp decline. The divergences are developing on the awesome oscillators. Came down to support at the 5,400 area, and then with the China retaliation, we saw futures drop, and we saw this gap lower, and the S&P dropped another 6%. The wide range bar attempted to recover with the jobs report with futures initially, couldn't do it. Attempted to recover with Powell, couldn't do it. The market did not like what Powell had to say. Some other interesting levels that I'll be showing you in order to turn it around. Again, signals have to turn back to bullish. The signals remain bearish. With the tariffs in 2018, we went lower, bottomed out a few days later. Here with the 2005 tariffs, we're selling off And we're going much lower, down to test the August low, just breaching that a little bit. You still got the divergences in place. Any indicators like here with momentum, we're going to a new low, but we're not doing that. We've had the bullish signals over here. I told you at the time to produce a reversal, or if we get rejection, depending on what happened at the 200 period moving average. I told you that we were going to rally the 200, then we got to see what happens. A rejection at the 200, about a divergence forming here or on the awesome oscillator, ACD, the RSI, and the different indicators. Well, you can see it here with momentum, and then we have these gaps. And again, once the divergence is complete, we're going to see a powerful rally back up to fill these gaps, and then we'll be watching the 200 period moving average. We're doing exactly what Bitcoin did. Bitcoin's now participating in the sell-off. Bitcoin was actually up today, while the S&P sold off 6% and NASDAQ sold off. Bitcoin actually was up yesterday and today. Bitcoin didn't participate in the sell-off. It already bottomed, setting up a higher low. Powerful rebound back up off of the lows. Then pull back, is now setting up a higher low. The S&P will likely follow Bitcoin. It usually does. Divergences are forming on indicators in the daily time frame and on the intraday charts. Some of the intraday charts have it, some don't. We saw bars after these bullish signals flip the bars to green. We got the big rally, nearly 4%, but then we've seen the bars now turn back to red. They remain red. With the rally back up to the 200 period moving average, that's a black line right here. Signals tried, momentum tried to flip, but it couldn't. The bars remained red. Trend signals remain red. We tried to see some momentum signals try to flip back to bullish, couldn't do it. We got rejection at the 200. NASDAQ rallied up to just at that 200 and stalled there and reversed. Signals continue to remain bearish. In order to turn things around, all the red has to go away. Signals turn bearish right after the February 19th peak. They remain that way. Breaking the 5,400 level of support, getting this gap down of 6%. So we'll be watching. Again, historically, massive rallies have followed. It's what Bob Brinker used to call a bear raid. Again, I'm continuing to monitor my signals here, but again, the signals continue to be bearish. And we saw some momentum signals try to flip back to bullish, but quickly flip back to bearish. If we attempt to rebound, watch these gaps and the 200 period moving average. Now, I told you at this low right here, we're going to go back and test the 200 period moving average, and we see green bars here. Then we needed to be watching what happened at the 200 period moving average. Do you get above it or do you get rejection at it? We got rejection at it. We got the doji. I told you something big was going to happen, and we got that continuation doji. I told you a doji could be a continuation or a reversal. A continuation, and we lost the moving averages. Tried to turn down further on Monday, but then rallied back up nearly 4% to the moving averages and got rejection, the 10 and the 20 period. The 10 had tried to get above the 20, but then it crossed right back below here with this sell-off. Again, I talked about red bars reappearing here for diversions. And again, I talked about going below this level, undercutting this level. Well, we came down to that 5,400 level of support, and we busted right through that with China's retaliatory tariffs. We're still getting the red bars. The bars down here, the awesome oscillator bars are still red. They were not able to go positive. Again, I told you we could end up seeing a divergence develop. That's happening. Now we're breaking through the 5,400 area and just seeing this sharp decline, nearly 6% today on Friday. It's still forming the divergences. The RSI went a little bit lower, but the MACD still has a divergence in play. The awesome oscillator still has it. We still have it with momentum. We still have it on a lot of indicators. Signals remain bearish. Again, tried to flip back to bullish, momentum did, and it flipped right back to bearish. Same thing with the momentum line. It tried to turn up, and it flipped right back to bearish. In order to turn things around, the cloud has to flip green. The bars have to flip back to blue to be able to get back above the 200 period moving average. Divergences are forming, I said on Thursday, but again, they may not be done. Same thing here. Again, they're forming. We have extreme negativity. So once the divergence is complete, we're likely going to see a massive rebound back up. Now being told there's no possible way that's going to happen. Okay, for the NASDAQ daily chart, again, momentum tried to flip, but we got rejection at that 200. We're watching these 50 period moving averages. a death cross can do one of two things. It can give you a bottom if we end up getting it, which again, we're closing in on it now. It can produce a tradable bottom or usher in a bear market if you can't get back above those moving averages. Never really had much of a counter trend with this move right here. Again, on the S&P, it was 3.72%. There'll likely be an attempt, even like in 2022 when we sold off, there was an attempt to get back above the 200 period moving average. We'll likely see an attempt to do that and moving towards these two moving averages, the 50 and the 200 on the NASDAQ and on the S&P. And again, divergences are developing. They may not be done yet. Again, signals turned bearish right here after we peaked on February 19th. We saw the sell-off. We attempted the recovery here. Couldn't get above the 200, got rejection at it, and then the momentum signals turned right back to bearish. That's forming this divergence on the Awesome Oscillator and the MACD, NASDAQ daily chart. Again, in order to flip all this around back to bullish, you got to see a green cloud, you got to see blue bars, you got to get back above the 10 and the 20 period moving average. Attempted to do so here, it failed at the 200. And let me show you, just go back to the S&P. Again, just look at the moving averages here, the 200 and the 50 with these divergences. Just one more time on the S&P. Here's the 200 at 57.60. The 50 period is at 58.44. So just under 100 points away apart from each other. Watching that. Then again, we'll be watching. Do we get some green next week to complete this divergence? Do we begin to see the histogram begin to tick back up and allow, once it goes into positive territory, allow the MACD to get a bullish cross and complete the divergence here? But signals continue to be bearish. Now, two possibilities. One is this is corrective, and the correction is over. We're going to resume the advance. S&P was down 9% this week. Sentiment is extremely negative. Extreme fear is through the roof. A really good chance we're going to attempt a recovery, a bounce, watching to see what happens surrounding our 200 period and our 50 period moving average in the daily time frame. But now slightly breached this trend line with this sell-off this week from the 2022 low. Now, might be important if we can't get back above it, but trend lines do break all the time. Originally, we had this trend line. It broke, and the trend line changed. This trend line right here broke, and the trend line changed. It happens all the time. What does this break mean? And below that, we have this horizontal support from the 2022 high. This scenario shows a top. Had primary wave 4 over here. We finished primary wave 5 in 5 intermediate waves, 1, 2, 3, 4, and this is 5. And the negative divergences have played out, and they've given us this sell-off back to slightly now take out the trend line and the August low. We're now hitting this low right here around April there. I believe it looks like April, March, April there in 2024. And that is a support zone there. We've already taken out the support zone here at 5,400. We're now at this next support level. Underneath that is this horizontal support from the 2022 peak. So we've slightly breached this low over here from the August low, and we're in that support zone right now, slightly breaching the trend line. The problems with this sell-off is it does still look corrective. More about that in a moment. I'll be talking about this area in here, these highs and these lows and the sell-off. But this count, it's to play out. We need an impulsive 5-leg push lower, rebound back up for a lower high for an ABC if this count is to be correct. If the top is in. The problem is this doesn't look like a 5-leg push lower. It looks like a 3-leg push lower. It looks like not an impulsive move, but a corrective move. That's the problem, I think. This count says we've topped. Let me show you the other one. Now, this count shows that this is corrective. Now, the S&P has now dropped 17%. We had a really sharp decline this week of 9%. It's more than what we had in 2000 and 2007 in the topping process, where just a few weeks later we made new highs. Could this be more exaggerated because you have the longest bull market in history? You have more exaggerated moves in this market than any other time in history? Could be. There's a sell-off we had over here in July to the August low, about 10%, but the rally lasted quite a while after that, many, many months. It didn't last that long at the 2000 top and the 2007 top. It was not that long. This was multiple months. I wouldn't be surprised to see a massive, breathtaking recovery. The question is, will that other count hold, or will this count hold? Again, does this look corrective to you, or does it look impulsive? Impulsive is a 5-leg push lower. A corrective move, an ABC pattern, a WXY pattern, and it could be either one. And I'll show you on the daily chart real fast. And again, depending on the interpretation, do you have 3 here, like I have right here, as an ABC, or do you have 3 over here, and you've got WX and then Y, this whole thing? We'll be watching to see what happens with this this steep sell-off that we've had this week. If we begin to see negotiations, if we see Trump walk it back, if we see things calm down, see a massive rally back up, it is very possible. I don't think that, because people get very, very, very negative at bottoms. They get very, very bullish at tops, at peaks. And B, that primary wave 4 finished here, and we're on primary wave 5, but it's not done. And we have a 1, and we had a corrective move here for 2. And then this whole thing could have been 3 here or 3 here. And now we're getting this ABC move for intermediate wave 4. It's going to be followed by intermediate wave 5. That's the bullish interpretation, saying that no, we didn't top here, that there's still going to be one more push higher for the blow off top. And again, we have gone lower. We've seen a bigger sell-off. If we go down, continue to drop beyond 20%, then maybe the Fed does panic, which could suggest a top, but it still looks corrective. We've seen other big moves down still have gone to new highs. 27.5% sell-off right there. Over here, and back over here during this decline, this whole decline, we've seen significant sell-offs, and we were still able to recover. We've had one over here, but we haven't had a significant sell-off in quite a while. So could this be it? Could this be a reset? And could it be a wave 4, intermediate wave 4, to give us the final push higher, which I still think is very, very possible. And again, with the negative sentiment, I mean, the negativity right now is just so doom and gloom that if we get any kind of positive news, likely to spark a massive, massive rally of huge percentage moves back and fill those gaps that we've created on Thursday and Friday. Especially to go back and test the 200 and the 50. Now, here I've marked this as the wave 3, and that's that this whole thing is an extended wave 3 right up to that point, and now you have this ABC move. There's another way to interpret that. We're about to get the intermediate wave 5. No possible way. It is still very, very possible if it's corrective and we recover. Here's the first way I just showed you on the weekly chart. Here it is on the daily chart that we had this failed breakout. And remember, we never had greed or extreme greed up here. We had the highest we ever got back up to after the January low was to neutral. We only got up to the reading of 50. And up here we were still seeing sentiment readings in the 40s up here at the top. Rarely do you peak on, fear and neutral readings and negative sentiment. Most tops are formed with very, very bullish sentiment. That calls that into question as a top. But you're going to have to decide, does this look corrective to you, or does this look impulsive? Impulsive, again, the 5-leg push lower, or does this look like a corrective move? It looks corrective to me. This is one interpretation, that if we did peak here, that we have this 3-leg push lower for an ABC move. These gaps are going to get filled. And the question becomes, can we get back above the 200 period moving average? And again, is it going to be that we get some kind of news surrounding the tariffs, or does the Fed end up coming to the rescue after all? If Fed does come to the rescue, does that mean we stop making new highs? Just some things to be paying attention to. But could this be corrective and we end up having an exaggerated move to the downside, bigger than the process than we saw in 2000 and 2007? We have the longest bull market in history with very, very exaggerated moves because of the QE and the AI rally and all the rest of it. We've had very, very exaggerated moves. This market up and down. We've had several corrective moves that have been greater than 20% or at 20%, yet the bull market has remained. Pandemic was 35%. Well, that was a bear market. No, it wasn't. Was it the shortest bear market in history, only 3.5 weeks? Or was it a crash move, a major correction like what we're getting right now in the larger bull market? And that's what I'm saying. Nobody thought when we had the pandemic sell-off that we'd be able to make new highs, and we ended up doing it. So again, you're going to get these gaps filled, and then the question is, are we going to be able to get back above that 200 period and the 50? Do we get the death cross here? Can we recover? So here's one interpretation, an ABC move, intermediate wave 4, somewhere down here once we see the divergence is complete and we get this massive rebound back up. There are a few more ways to look at this. I'm just showing you two. Another possibility is we've peaked here with 3, intermediate wave 3. We have a WXY, and the Y is this ABC structure. We have a couple of other ways to count it to get at the same. But again, the question now becomes, if we have a peak in the market and we've topped, we need to see an impulsive move down. So is this 1, 2, we get this 3, 4, and 5, and we just see the market fall into the abyss? But it still looks corrective to me, at least so far. If we've topped, we need to see a 5-leg push down, a 3-leg push back up, or a lower high. This doesn't look like a 5-leg push down to me. That's why I think it's corrective. So those are the two interpretations I think are most likely. I do have a couple others that I'm looking at, and different ways you can count this. And if you get down to the smaller time frames, I can show you different things on it. I don't have time to do that. The previous count, I showed you just a simple ABC from here. This would be more of a complex corrective pattern. I have a really hard time trying to get a 5-leg, but if we go 1, 2, 3, then we rally back up, and then we come back and down, and we go lower, and we get 4 and 5, then you got your 5-wave impulsive move there. And then that could be suggesting a top right here. Elliott wave is speculation. Counts can be validated or invalidated all the time. I'm showing you what I'm looking at, and so far it looks corrective. Now, if we rally back up and we have a rally fail and we go to new lows and we see this thing continue drop, then again you could set up your 5-wave impulsive move. I think in order to do that, you got to get a rally and go to even lower levels. And right now we've already got pretty negative sentiment. So will it remain, or will that change? There you have it. Keep in mind that, again, with the sell-off right here, we can finish some bullish divergences, indicators, as long as they don't start going to new lows. We saw that with the RSI. The RSI had a bullish divergence in play, and it's going to a new low right here. Other indicators are not. Other indicators are still forming divergences. But watching the support area here, again, the August low in 2024 and the April low here in 2024.